Hey everyone, welcome back to the Noob Selling Options channel. Today, I've got a super highly requested exclusive explainer lined up for you. We're going to completely unpack a brand new addition to the portfolio. If you're into structured, deep dive analysis that actually cuts through all the market noise, well, you're absolutely in the right place. Let's get into it.
Right off the bat, let's anchor ourselves with the actual real money trade details. I officially bought 100 shares of Boston Scientific, that's ticker symbol BSX, at exactly $52.67 per share. Now, as we unpack the entire thesis behind this specific entry price over the next few minutes, do me a huge favor. Hit that like button and subscribe to the channel if you haven't already. It really helps us out.
Okay, here's our quick agenda to keep us on track today. We're going to look at why I bought BSX, their business and its moat, future growth engines, follow the smart money, and finish up with the Peter Lynch perspective.
So, Section 1. Why I bought BSX. Basically, we are hunting for a high-quality discount. The short answer here, I absolutely love buying high-quality healthcare stalwarts when the market just hands them to us at a discount. Recently, Boston Scientific had a pretty significant post-earnings pullback. The stock got completely slammed down from its previous highs, mostly just because of some minor guidance adjustments. But here's the kicker. Their core business actually grew organic revenue by over 7% and beat quarterly EPS estimates. So what we have here is a highly compelling risk-reward setup.
All right, moving right along to Section 2, the business and its moat, and how exactly they are protecting their market share. Let's establish what this company actually does to justify our capital.
If you don't know, Boston Scientific is a massive global medical technology leader. Instead of doing traditional open surgeries, doctors use BSX's highly specialized, minimally invasive devices to treat some really complex internal conditions. And their revenue? It's neatly split into two main divisions. The lion's share, about 67%, comes from cardiovascular, so think structural heart therapies, pacemakers, that kind of thing. The remaining 33% is med-surg, which covers essential procedures in endoscopy and urology.
But here's what actually makes it a phenomenal investment for us. First up, insanely high switching costs. Surgeons train extensively on these specific BSX tools in their mapping software. Once they're locked into that ecosystem, switching to a competitor, it requires a brutal, painful learning curve. Second, you have massive regulatory and patent barriers. We're talking about Class 3 FDA life-saving implants here. The years of clinical trials and this huge, sprawling patent portfolio practically guarantee that low-cost generics stay entirely out of the picture. And third, recurring procedure revenue. They aren't just selling a big expensive machine once. They're selling the specialized catheters, the wires, the single-use implants that are required for literally every single procedure. That translates directly into incredibly sticky recurring cash flow.
Which brings us to Section 3, BSX Future Growth Engines, and how they're targeting unmet needs. A great moat protects the castle, sure, but we need powerful growth engines to drive future profits and push that stock price up. So the really crucial point to grasp here is that BSX is laser-focused on high-margin, category-defining products that target massive, completely unmet medical needs. Take a look at FARAPULSE, for example. This is an absolute game-changer for treating atrial fibrillation, or AFib. Instead of using the old-school legacy methods of extreme heat or cold to clear out heart tissue, it uses highly precise electric fields. It makes the whole procedure significantly safer and way faster. Then, we have the WATCHMAN FLX. This is their flagship implant that permanently seals off the left atrial appendage in AFib patients. And why is that such a big deal? Because it literally allows these patients to stop taking lifelong blood thinners. It's a huge quality of life upgrade, and they've already dominated the global market with over 500,000 implants.
Okay, so now that we know the underlying business is stellar and the growth engines are humming, let's pivot to pricing in Section 4. We're going to follow the smart money and look at institutional conviction.
What is super fascinating here is the chronological flow of capital. We're just neutrally reporting the timeline of how this all went down. Back in late December 2025, we saw politicians, like Senator Markwayne Mullin, entering the stock at price points way up near $95 and above. Then, moving into early to mid-2026, other politicians, like Representative Ro Khanna, bought in tranches between $76 and $90 plus. Fast forward to August 2026. The stock is getting battered down by short-term market noise. And who steps in? The CEO. He executes a massive buy at an average of $48.33. Shortly after that, we executed our trade at $52.67. So as you can see, we are getting in at a steep, heavily discounted entry price compared to those premiums paid earlier by the politicians.
But let me put a massive magnifying glass on that CEO purchase for a second. $9 million. That is the exact figure. On August 3, 2026, Chairman and CEO Michael F. Mahoney bought 186,240 shares of his own company's stock right on the open market. This single massive transaction expanded his direct holdings by roughly 13%. Listen, when a CEO drops over $9 million of their own cash during a market panic, it sends a crystal clear, undeniable signal of corporate confidence. He knows this business from the inside out and clearly believes the stock is incredibly cheap relative to its long-term potential.
Which brings us perfectly to Section 5, the Peter Lynch perspective, what I like to call the ultimate green light. Let's frame our final analysis today through the lens of one of the greatest investors of all time. This is going to help establish our realistic expectations for this trade. As Peter Lynch famously wrote, insiders might sell their stock for any number of reasons, but they only buy for one: they think the price is going up. Seeing the CEO drop $9 million on shares, that is the ultimate Lynchian green light. You know, Lynch loved medical device companies because they operate on inelastic demand. I mean, hospitals simply do not stop buying cardiac catheters just because we're in a recession. And he built a legendary career out of scooping up great stalwarts when Wall Street threw them out over short-term noise, which is exactly what happened here with BSX's recent earnings misinterpretation. All right, let's break down the actual math to validate this further. At our entry price of $52.67, BSX is trading at a forward PE of roughly 16x. Given their highly predictable 11 to 12% annual earnings growth, our forward PEG ratio is sitting right around 1.3x. Now, sure, Lynch ideally hunted for PEs under 1.0, but honestly, getting a 1.3x PEG for a prime healthcare market leader during a pullback, that is absolutely a solid, highly acceptable entry point. And what about our exit plan? Well, we are targeting a fair value of $80 to $90 plus. If the stock rebounds and that PE ratio expands back above 25x, our plan is to systematically trim the position and reallocate that capital.
Speaking of our targets, let's talk about our expected gain. We're looking for a reliable 30 to 50% return, but it's super crucial to manage our expectations here, folks. Remember, Lynch bought stalwarts like Boston Scientific to provide defensive stability to a portfolio. We are stepping up to the plate looking for highly reliable, solid base hits here. We are not treating this as some wild, speculative moonshot. So I'm going to leave you with a question to ponder today. Are you trailing the CEO's massive $9 million trade into the medical device sector? I really want to hear your thoughts on this. Let me know your own thesis down in the comments below. I always love reading your insights. Thank you so much for joining me for this explainer today. If you found this structured breakdown helpful, please hit that like button, subscribe to Noob Selling Options for more transparent portfolio updates, and I will see you all in the next one.